I'm Owen Bigland. This is the Inside Edge video blog. I read a really good article here on the effect of these record low interest rates we currently have and we've enjoyed here for quite some time. And according to our finance minister, I think we're going to be enjoying for a long time to come. We are going to be in a low rate interest rate environment here for the foreseeable future. And the nice thing is, I mean, maybe in another 5 years as rates start to maybe go up, because eventually they will. They can't go any lower now. But the nice thing is, hey, in another 5 years, you could lock in a 5 or 7 year or even a 10-year fixed. So now we're talking 5 years plus another 5 or 12. You know, you could easily now lock in pretty low interest rates, sub 3% for a decade or more now, which is incredible. So I read a good article, and I'll give this guy a plug. He sends me these things. I've never met the man, but it's David Ford and the Sparrow Mortgage Partners. He sends me his email or his monthly newsletter from time to time, and he had a good one here entitled "The Math on 2% Mortgage Rates is Staggering," and it is. I've blogged many times over the years about running the numbers on where our current interest rate are, and for every dollar you put in, what that's doing to the principal payment versus the interest portion. So I always use, I've blogged about many times, calculator.net. You can go on there and they have a mortgage calculator. And the thing I like about this one is you can go into their mortgage calculator and you can fiddle around with the numbers there. You can put in 2% 25-year amortization, or put in 2.2 or 2.3. The nice thing is with this calculator is it breaks it down for the 25 years and it splits down the principal versus the interest portion. So just to keep it simple here, you know, at 2% interest rates, and again, I tell people to tweak the numbers here, goof around with them, because when I started out, I've told people this many times, when I started out over 30 years ago, I wasn't paying 2%. I was paying 14, 15% interest rates. I've got clients that were paying 20% interest rates back in the early 80s. Now, I know for you young whippersnappers, your eyes are glazing over. 20%, that's ridiculous. Well, it wasn't that long ago, really. Early 80s. You guys, a lot of you guys weren't even born then. I still remember, you know, when my interest rate dropped down below double digits, when I got into a 9.5% interest rate, which was not that long ago, really. I thought I had died and gone to heaven. But have a look at what 2% is doing now. You know, back when I started out at, let's call it 14%, for every $1,000 that I was paying on my mortgage, probably about 900 of that was going to interest, for God's sake. You were doing very little damage to the principal. Now take a look and fiddle with the numbers. Put in 3.5 or 3 or even 2, which is where we're at now, and have a look at that ratio. You are doing tremendous amount of damage to that principal right from day one here. And after about 10 years, I mean, it's all principal payment now. And this is the big difference here. And this is why, you know, our prices have been on a steady rise as interest rates go lower. This is also why I blogged several times here on how I've taken out or added another mortgage to some clear title properties I've got. The interest rates are just too good right now. When I can borrow at 2% on a free clear title property, it's an investment property, I can deduct the interest at 2%, which is peanuts. I can take that money and invest it in Bell Canada or Johnson & Johnson or a basket of good dividend-paying stocks and earn probably, with the yield and the capital gain, average 6-7% all day. So have a look at that. You know, the power of these low interest rates is not to be underestimated, and that's why you're seeing such a robust real estate market right now. We lost 6 weeks for COVID, and now it's all been pushed back into the summer. I've never been busier. And I'm back getting into some bidding wars again now, for God's sakes. I had a bidding war on a loft in Fairview the other night. We had 8 offers on it. Interest rates are the big driver, but have a look. Fool around with the numbers a little bit. And again, I'm a big believer in low interest rates. Anyone who doesn't like low interest rates, I can tell you, doesn't have any assets. And I'm taking advantage. I'm not over leveraging. Do not do that. Pretty tough to over leverage, if not impossible, with Vancouver Real Estate going through the big banks. They won't let you. But as I say, I'm now taking out equity out of some of my clear titled properties at 2.1% deductible and investing it and getting a 6, 7, 8% return all day. You know, Bell Canada was paying me 6% yield back a couple of months ago. I'm not going to hit a home run on the capital gain on it, but I should average another 2% annualized. So now I'm cooking at 8%. Nice spread. So have a look, calculator.net, fool around with the numbers. This is one of the main reasons why is driving our market right now. And I think we are we're going to be in a low interest rate environment for the foreseeable future, probably a decade or more. Even if rates start creeping up here in another 3 or 4 years, hey, you can always lock in a 5 or 7 year fixed at that time at a good rate, which is probably what I'll be doing. But for now, I've got a lot of my stuff in variable mortgages and just let it ride. If interest rates start to creep up, again, you can lock them in for 5-year terms or whatever you want to do. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.